Five ways to avoid penalties and high taxes, especially when you are in small business. Now, when we talk of small business taxpayers, we mean those businesses whose turnover is below 150 millions in a year of income. And when we talk of a year of income, we mean a period of 12 months. So depending on when you registered your business with the tax authorities, you have to know when your year of income starts and when it ends. So we are going to discuss 5 ways to avoid penalties, tax penalties and higher taxes. 1, register your business. When you register your business with the Uganda Registration Services Bureau, but also local authorities, you stand a chance of avoiding the penalties, but also reduce the tax burden. For example, when you have a business which is not registered, it becomes hard for tax authorities or tax officers to assess you. Because there is no basis. In that case, they will be assessing an individual, not a registered business. So it is better you register your business with Uganda Registration Services Bureau if you are in Uganda, and if you're in Kenya, you register it with the registration authorities in Kenya, or if you are in Rwanda, they are responsible government institutions to register businesses. 2, keep proper books of accounts. Now, here you have to keep proper books of records. When the year ends, the tax officers will expect you to prepare the financial statements. For example, the income statement, the balance sheet, the statement of changes in equity, and the statement of cash flows, but also provide explanatory notes giving details of all the items appearing in the financial statements. So if, for example, you prepare your income statement, you are trying to show that this is how you performed. The income statement will show the profit that you made during the year, and it is on this profit that the tax officers will base on while assessing you, because tax is subjected on profit. So if you don't keep books of accounts, or if you don't keep records, for them they will assume. I have been seeing very many people in businesses paying a lot of taxes even when they were not supposed to pay, just because there is no basis for assessment. So if you don't have records, the tax officers will simply look in the shelves, they see the stock that you have, and then they assess you. So in that case, you may pay a lot, or if you're lucky, you may pay less. But of course, there is no way you can pay less if you don't have records. So kindly keep proper books of records. Then 4, get a tax consultant or hire a tax consultant to help you. Now, the only advantage, in fact, there are very many advantages of hiring a tax consultant, because a tax consultant will help you understand the tax heads you should register for. Because most of you, the business people, are not aware of the tax heads in Uganda, and if you hire a qualified tax accountant, it will help you understand the tax heads you should register for. For example, if you have employees you hire people to work for you. In that case, you must register for pay as you earn. And by default, you become a tax agent, a withholding tax agent, where you will be withholding tax from these employees and then pay it at the end of the month. But also, VAT, a tax consultant will help you understand when you are registered or when you should register for VAT. Because I think I will prepare a session about VAT. For it, you need to meet the registration threshold of 37.5 million in 3 consecutive months. In a period of 1 quarter, you must have made sales of taxable supplies that are above 37.5 million. Or when you look at a year, the sales or turnover made in the year of income must be above 150 million. So it is only a tax consultant who can help you understand this. And of course, failure to register when you qualify, it will attract a penalty. The fifth way to avoid penalties and higher taxes is to file tax returns in time. A return is a self-declaration. You declare that this is how much I have made during the year, and therefore this is how much I should pay. You don't wait for tax officers to first come and force you to file returns or file for you, because in that case, of course, penalties will come in for late filing, but also interest for late payment. So you have to file all the tax returns in time to avoid tax penalties, but also avoid paying higher taxes. So the returns, they are those that are filed on a monthly basis. For example, pay as you earn, value added tax, VAT. We have withholding tax and others. So those ones, of course, if you have a tax consultant, you can help you file these returns. So by filing the returns in time, it will help you avoid penalties for late filing, but also interest for late payments. Then the fifth way, which is the last one, of course, is to pay the resultant tax in time. Of course, there are people who file returns and after filing, they keep quiet. If you file a return, you must pay. Let's assume you filed a pay return at the end of the month, and the tax in the return was, let's assume, 10 million. So, for the case of Uganda, let us take an example of this month. Now we are in November. The pay return for November must be filed not later than 15th of December. And you must pay not later than 15th of December. So you must understand the due dates for filing and the due dates for payments. Failure to know that, you eventually pay penalties for late filing and penalties for late payments. So those are the 5 ways to avoid paying penalties to tax authorities, but also paying higher taxes. If you find that this video is useful, kindly hit the subscription button, but also share with your colleagues. And also, if you need tax consultant services, kindly you can contact me. I will help and guide on how you can avoid penalties, but also avoid paying higher taxes. Thank you very much. God bless you.